Alrighty traders, George here in time for the week ahead. Monday morning already underway here, so we've got a little bit to work with. One, gold, the continued weakness, looking for basically a retest of the swing lows here at 1130. I've got a new third target here at 1104.90s for the breakdown to new structure lows and a one-to-one harmonic of this sell impulse. This is all setting up moves to much lower prices for gold. Where we are right now, assuming we don't move down much more at all, seeing price back over 1166 would be a sign of strength for the bulls and potentially see more short covering here, basically getting over this balance beam. However, we're well below and pushing off of that level right now. So a retest of 1130s, look for 1105 essentially, and this is all setting up a move to much greater lows. And if you've been following my work on gold, you know, this big picture projection chart still has a lot of relevance. I could actually tune it up in a couple places, but just to point out that two key ratio zones for gold to move to would be the very low 1000s and then this essentially the low 8s. These two ranges right here are projections based on what price has already done and relative to what it's done not just on the sell side but on the rally side. So there's a lot of relevance to these targets down here. It's far away from where price is, but when I was talking about gold moving into these levels here when we were up here, it was the same deal. You have to be able to take into account the impulses and the combinations of where all these prices resonate to have an idea where it's going to go. What counts is what's actually happened with price and what levels have been taken over or abandoned. So we've just had a mass abandoning of this area up here. The round number of 1200 is broken, and if you look to the left on this chart here, two other zones of key interest were at the time was about 1100 and also this mid 900 zone. Here's where all the trading commitment is. Look at how much is happening here. Look where price is. So we're basically breaking below the heaviest traded zone right now. Can it be more bearish than that? No, that's horrible for the bull scenario. This air pocket right here, not as much trading. So a big drop down to the mid 900s. 924 is this spike right here. 970 and about 880 for the floor here. So really 924 is the spike. The 1080 would really be the next target below 1105s, and then we're down to this level here. So this is begging a trip down here. We know there's a ratio target just a little bit above it, and there's one that's a bit below it. The one that hits below could put in a scenario where it does an outside return and finds resistance here and then drives down to this 610 level. This level here correlates to about the level that we retraced to after the 1970 spike in the 70s, where we essentially were sideways for a couple decades after that. That exact same fractal has been in development here the entire time. That's why it was easy to call this top here and to look for prices much lower than anybody was thinking at the time. We're just getting started here. This is just about the first half of the move down, if that's going to be the case. And with price breaking below this floor here, we're getting serious confirmation of that. So as I mentioned earlier, where we are right now, if we don't break much lower, over 1166s could set up some nice interim long action. But the bigger picture writings on the wall here for gold to be driving much lower, and there's just no strength to show anything counter to that at this time. So the big picture targets, as talked about a couple years ago, still 100% relevant, and we're getting even more confirmation that that next leg is going to be happening. It will likely happen very quickly, as this move did right here. That is basically what I've got to say about gold. Let's take a quick look at oil. Alright gang, so now we're over to oil on a monthly chart. Obviously things are pretty bad for oil. We're breaking below the prior lows that we have just made. We're trading in the low 43s right now. We're into this air pocket, not as much trading. So we just let go of this floor here in the mid 49s on the monthly. We know there's some relevant price points below that, but we've already given them up, and we know that when we go to a daily or an hourly chart that we're free and clear of all that. These are just the same retrace grids in opposite directions, so you can see where some of these zones come in. The 618 as a projection for this guy here takes us to 37s, and then using it the other way, the pi would take me down to the low 29s, which correlates to this spike here. From this swing high here and retrace this bounce, you'll see that we spiked at the 707, so that's relative to the square root of 2. If I project to the 707 here, that takes me to 2689. So 2689 is going to be my low call for oil. So these are the forecasted price points below where we are that are going to have resonance with price one way or another. Where the likely end of move would come in if it correlates with this prior structure here would be actually down here at 2689s. To get to that level, we actually have to trade through this balance beam right here. So that's the big challenge. Can we put in an end of move before this zone, or are we going to break just a little bit into it? That is my projection for lower prices right now. What will be interesting to see and likely going to happen will be when we break lower to these zones, you'll see intraday and on an hourly chart that the traders will start to do things at these levels. They will resonate at them just as they did at other levels that I've shown in other markets. So this will be another opportunity for you to see that in development. 2689 is my end of move call. 4170, middle of the channel. 37 is the fib key 618 level to watch. And then we've got 33 as a top line, mid 29s here, low 29s for the spike. And that's it. Those are the main price points below where we are. Those are the absolute most relevant ones. And we'll see what happens with this move down here. But very likely we're going to be seeing oil go down quite a bit more than where it is. That'll do it for your review for the week ahead. Really, we'll just stick to these two key markets. We'll look at a lot more in the live room starting tomorrow. And we'll see you there.